So I'm on my boat the other day, and there's this boat passing me coming this way, right? And for some reason, I'm like, man, it's like an old folks home, right? There's like 4 elderly people on the boat, and my brother-in-law looks at me. He goes, "They're our age."
Yep.
I don't identify with people my age.
I don't identify with people my age either.
I feel like, apparently I'm an old folks. All right. Welcome to podcast episode 14. I'm here with Seth.
Hello.
I am not going to try and pronounce his last name, but I'm going to go ahead.
All right. Di Bartolo.
Di Bartolo.
Yes.
Okay. Today, all right, so I've found that a lot of my borrowers call and they don't understand the process of buying a home for their family. They don't even know where to start.
All right.
So I thought I'd take a quick 30 minutes and talk to Seth about, where would you start if you were buying a home for your family to live in?
I would maybe go online, but I think I got to talk to someone who's a professional, to be honest with you. I'm more about getting it done right. So probably find one of my friends who's a realtor.
Okay.
I'd probably go there.
All right. And then what's the realtor most likely going to do? They want to make sure, so everyone wants a home, but they want to make sure you can actually afford a home, right? So where's the direction they're going to send you?
They would send us over to a mortgage loan advisor. They used to call us mortgage loan originators, but I think the job is more important than just originating the loan. It's actually helping you on the path to home ownership. And so the really that brings up the question is where to start.
Yep.
And I think step number one, it could be confusing for some people. So where would you start with?
So step one for me, it's easy. You have to talk to a mortgage professional. Sure. Someone you trust, someone in your community, and the things that this person is going to talk to you about. One is your down payment options. Do you want to put 0 down or do you want to put 50% down, right? So they're going to discuss how much cash you have and do you have the ability to put money down plus closing costs.
Okay. And just a quick point on that, if we're getting into, exactly the down payment, 20%, we've always heard that, or how much should we save, before moving down? I know when I was there, it was like $16,000 for the house that I wanted. Yep. I didn't even know how much a good starting point is. What's a good rule of thumb for down payment?
So I think like first-time home buyers, if they're not using some of the government grant programs, I think like when I buy my primary residence as a home I'm going to live in with my family, I really enjoy putting 5% down.
5%.
I get really good interest rates with 5% down. The programs are not restricting with 5% down.
And I guess there are different types of programs you just mentioned. 5% program, what program would that be?
So normally my 5% down programs are regular conventional loans.
Conventional loans, okay.
Right? And a conventional loan is just basically, an easy way to explain it is a loan the bank likes.
Okay.
Right? There's no funny business about it, right? You have your own down payment or a gift of assets down.
A gift of assets down, okay. And is there a particular limitation on that? Let's say my credit's not as great. Is there another program that I could use that maybe it's, let's say, 600. It's not great. It's not over, let's say, 620 or 640.
So sometimes when a borrower does not qualify for, let's say, that conventional loan, we will absolutely look at government financing, which we would call FHA loans.
And what does FHA actually mean, if you could spell it out?
So
not first-time home asset, or what is that?
That's one of the jokes in the mortgage business is how do you spell FHA? Mm-hmm. Like, because the new loan originators are like, they don't even know how to spell FHA. Mm-hmm. But so FHA allows a person to buy a home with only 3.5% down plus closing costs.
So does that mean that it's more risky? So I'm just trying to get rid of some of these disclaimers.
Yeah, they're trying to make home ownership possible, right? Okay. So they will accept lower credit scores. They will accept a higher debt to income. We're using a lot of mortgage lingo here, but essentially you could spend a larger portion of your income on, let's say, a housing expense or car, student loans, credit cards, that kind of thing, right?
So it essentially goes down to how much you can afford
And see, this is the important part is a lot of people, when they're thinking about buying a home, they don't know how much they can afford. So that first conversation with that loan originator, they're going to kind of look at your income and they're going to explain, hey, this is, based on this conversation and we pulled your credit and we've done all this. This is what you could afford to spend per month and qualify for a home.
So let's say I'm looking, I don't know, $200,000 or $300,000 house. As far as the payment differences, what kind of expectations could we have for those?
So like when I'm talking to my borrowers, right? Let's just say we've already identified they're an FHA borrower.
Sure.
So if they say, hey, $200,000 home, we already know 3.5% of $200,000, $7,000. You've got closing costs and prepaids, and we'll talk about that as we go down. But how do you calculate a payment on $200,000? Well, you really cannot do this until you have taxes and insurance.
Okay.
But a very good number with today's interest rates is if you use $800 per 100,000. So if you want to buy a $200,000 home, I would say your principal, interest, taxes, insurance, and mortgage insurance would be 800 times 2, around $1,600.
Okay.
Now, once you pick out a property, I can identify the actual insurance amount, or we can get a quote from an insurance agent.
Okay.
We can look at the actual tax bill, and we can zero in on an exact payment and not just a guess.
So that would be the expectation of the payment and really an exact number for that particular borrower to go off of that particular house amount.
I think, like for me, I know when I buy a home, I want to know how much it's going to cost every single month.
Yeah.
Because that's what is going to affect my family.
Of course. And
right.
I guess along those same lines, is there any upfront costs that we need to be aware of? Or we hear the phrase cash to close. Those things are kind of thrown around. What do they actually mean? Upfront cost versus cash to close?
So a couple things. First of all, cash to close does not mean you physically bring $100 bills to the title company, right?
Long are the days of the briefcase, right?
Yes, yeah. Okay. But no, most importantly is when we do upfront estimates and we tell a borrower you're going to need X amount of money to close, we're preparing you for what we believe your final number to close is so you can prepare your family for that number. So let's say we say it's $23,000.
Okay.
If I tell you your cash to close is $23,000, once I know all the facts, it should be around $23,000.
So what's included, I guess, in that overall cash to close? Is it, you said taxes and insurance. What do you mean by that?
So part of buying a home, you have to pay home insurance, right? You got to insure the property. So we have the first years of property insurance premium. We're building an escrow account to pay your taxes and insurance next year when they come next due. There's your closing costs and there's your down payment. But let's separate out the cash to close from the upfronts, because this is two different times we're spending money, right? So the upfronts is before closing.
Okay, so let's call it separate from the contract itself, right?
Yeah, so you have to, most likely you're going to need an appraisal.
Okay.
Probably 90% of the transactions today need an appraisal. So the appraiser is not known by us. This is not our friend.
Okay.
It cannot be known by the realtor. We're choosing a vendor management company to order an appraisal. The next guy on the list gets to do the job.
So we can't go out and purchase an appraisal and give you the appraisal. That
right.
Doesn't
you
quite
cannot
work that
control
way,
the process. We cannot control the process.
All right.
And today, typically appraisals are around $650, which is massively different from 10 years ago. Okay. I could remember when appraisals were $225.
Wow.
Okay. So one upfront is appraisal. The second upfront is inspections.
Inspections, like the homeowner's inspections.
Yeah, so you may want to know if the water heater's working or how much longer does the roof have.
Okay. Does that affect insurance at all, or?
So most of the insurance agents, depending on the age of the home, will require a copy of a wind mitigation in 4-point, which is part of the inspection process. Okay. But sticking to just the financials here.
Okay.
You pay for the appraisal. You pay for the home inspection.
Okay.
Most 100% of contracts have an earnest money deposit
of some sort.
So that is money going to the seller's title company.
And that's paid before closing. So it's taken off at the end or before?
Yes, it'll reduce your cash to close.
Okay.
All right. And then what if you're in an HOA? So first of all, what's an HOA?
HOA is a homeowners association where you could easily have it. I've seen it as low as $116 a month, or $50 even. as high as $2,500 a month if,
Well,
if you have a golf course,
yeah.
or even more. And then there are different types too. There's the normal association as well as the Masters Association.
But so the upfronts is what I'm concerned
could be a
about in this
lot.
conversation.
Yeah.
So normally the HOAs will charge you an application fee.
Oh, right.
Okay, I've seen that around $100
For an approval just to get into the
So
house?
this has nothing to do with your loan. This has to just to do with you and your integrity and your credit and your background.
All right.
So the HOA may not want to have people with criminal records in their background, or for whatever reason. So they do a background check on all the residences. Okay. So you have a upfront to the HOA. And then if you're doing a mortgage loan, the mortgage lender will need the HOA to fill out a document. There could be money there. There could be a capital contribution. This is something you want to ask your real estate agent.
Improvements, I guess, a new tennis court.
Well, no, like
roads?
sometimes up front they say, hey, if you want to become part of our HOA, it's $3,000. We have one of those in Cape Coral. Cody, did you know the name of that one? We have offset.
No.
All right. Anyway.
Cape Coral, but like you have country clubs like Fiddlesticks.
Sure.
Yeah.
80 grand to buy in.
You definitely want to know from your real estate agent, do I have to pay any capital contributions to be a part of this homeowners association? Okay, so
we've talked about the money.
We've talked about the money. We've talked about talking to your mortgage loan officer. And then what's the next step with the loan officer? Once you're like, okay, I think I want to go forward, what do you do?
All right, so let's say I've got an idea. I've talked to the real estate agent. I've talked to the loan advisor. Don't you need a house? So
Well, I think the next step is now that you've done all that due diligence with the loan originator, you've got to apply for a loan.
Oh, the application, of course. Right.
A lot of people are scared about a mortgage application. Like, oh my gosh, what are they going to want?
Is that like an outside fee that we have to pay for? I mean, do you charge an application fee for your loans?
We don't charge an application fee, and I want to keep this as short and simple as possible. The application: who you are, where you live, where you work, how much you make, your assets, bankruptcies, foreclosures, judgments, alimony, child support.
Easy enough. 10 documents, we're good?
7 minutes.
7 minutes, okay.
Okay. Some borrowers will take 14 weeks to fill out an application.
Wow.
We need 7 minutes of your life. Fill out the application. It will actually ask you to upload documents if you're applying with community lending. And the approval, your conditional, your pre-approval, we'll call it at this point.
Okay.
Your loan originator, if you're not self-employed, should be able to do easily within 24 hours. The really good ones within hours.
Okay.
Don't wait till the last minute to do this, though. That's not what I'm encouraging.
So not Friday at 5 p.m. to go to a house on Saturday morning.
Absolutely.
Okay.
All right.
Give us a little bit of time.
Now we have our pre-approval letter.
All right.
Okay. So you guys have talked to your mortgage person. You've applied. You've been pre-approved. Now is when the real estate agent gets involved.
Okay. They're going to take you to a house. They're going to have you walk through the house, perhaps go to an open house, or what's the next step, I guess, once they get involved?
So traditionally what happens, when I'm looking for a home is my agent will have a discussion over the phone or in person, and they'll ask me about my needs and my wants and my desires.
Okay.
Right. And they'll look at my pre-approval letter, and let's say, I want a 4-bedroom, 2-bath house in this zip code. And then they'll send me everything for sale that fits my criteria, right? And then I'll like a couple of them, and they'll schedule appointments, and we'll go out and make offers. But what I want to say from the loan end is your loan originator, whoever's handling your loan, once you've zeroed in on a few houses, should be able to prepare a monthly payment and an estimated cash to close on each one of those houses for you. Because again, when I'm making an offer on a home, I want to know what I'm getting into.
Right.
So
the question I guess I have is, how long do we have with that pre-approval letter to go out and shop for a house? Do we have to keep giving you documents? How long is that letter act traditionally good for?
So that's a very important question. When there's any life event changes, that letter's pretty much void. You got to do it again. You don't have to fill out the whole application again, but let's just say you buy a Ferrari.
Okay.
You might no longer qualify for that loan.
So no large expenses. What if you take in a modest vacation, let's say $3,000, and then you put it on your credit card. Now you've got an extra debt, right? Do I have to let you know about that, or should I just kind of keep it?
I would advise you during the home buying process, make your loan originator your best friend. Okay, so what
do you mean by that, I guess?
My thing is like, okay, I'm going on vacation. I spent $3,000. Who cares? Right? Well, let's just say you spent $3,000 and your credit card limit is $3,500.
Sure.
And that spending of $3,000 dropped your credit score 100 points. Ooh. And you've taken 3 months to find a home and we have to repull your credit.
True.
Right? So while you're shopping for a home, make your mortgage loan originator your best friend. And if he's not your best friend and he's not taking your phone calls, maybe you need to find a new one.
That's true. Yeah.
All right,
communication is key. And so by that, you want to make sure that if you have any ideas of different houses that you want, let the originator know, let the advisor know, so that they're able to then maybe tailor the letter to your liking.
Yeah.
So could you get approved for a higher amount, but on the letter put a lower amount so that the offer doesn't kind of show your cards? Like, let's say you're able to afford a $350,000 house, but you want to go in at $325,000.
I agree. So every time I make an offer on a home, my letter is customized to match that home. So if I'm making an offer on 123 Main Street for $200,000, then my letter says 123 Main Street, $200,000. Even if I'm qualified to buy $400,000, I don't want to show the seller that. Right. I don't want him to use that against him.
I was going to say, what are some issues? I know we're looking at a market where it's highest and best, but maybe we have some reservations about the property. Well, get into a bidding war.
So today, I think that 4 months ago, if you asked me that question, I would probably change the answer. But in today's market, where homes are sitting on the market a little longer and it's not as competitive and there's not multiple offers, I think, knowing that the letter comes from a local company, knowing that it's on the exact house, knowing that they're qualified, for the amount they're writing is what's important.
Okay.
So not only that, when you get your updated letter with your house, with your address, with the amount, your loan originator should provide you with your monthly payment estimate and your cash to close, so you know exactly what you're getting your family into.
And so let's say you've got the pre-approval and you found a house that you like. Next is, I guess, filling out the contract. You get the contract in there. It says, we talked about that earnest money deposit, or the EMD. That's on the contract as well. So I guess we're looking at the offer then, and it gets accepted. Let's go there. You've just submitted the offer and the contract. It gets accepted. What do we do with this accepted offer? We give it back to you?
Make sure your loan originator has a copy of it immediately. And here's why.
I was going to say how soon, but you said immediately.
Here's why, immediately. But here's why. The contract has a close date.
Okay.
It is a race to the close date. You do not want to lose 7 days in a 1 month period. Right. So what we prefer as loan originators is the same day you have an executed contract. That means the buyers have signed and the sellers have signed. Provide a copy to your mortgage loan originator. Your mortgage loan originator immediately should prepare your documents.
And what type of documents are those? Disclosures? Or what
so they're basically going to send you an electronic package of this is the way your loan looks. Okay, so I say looks because there's things that may change as we're moving forward. You may provide us with an actual insurance quote. In fact, you have to.
And you may lower the purchase price because you got it at a better deal. So now some of those numbers changed?
Well, yeah, the contract may have a certain purchase price. We're going to update the exact deal of how we think it's going to look when it closes.
Okay.
But again, it's not an exact science until you have those insurance quotes. Okay. So you're under contract. We provided you with your estimates. You've electronically signed them.
All right.
At this point, your loan originator should ask you to update any documents that have expired or become aged. So let's just say you've given us a pay stub and they're 4 months old now. We may ask you for updated pay stubs. But immediately in that same day, there's going to be a processor on the end of the mortgage company who's going to prepare your loan for underwriting. They're going to order title.
Okay.
Because they want to make sure you have a clear and marketable title.
No issues.
Make sure the seller didn't have any issues that marked up his title. You don't want to buy something that's cloudy.
Sure. So you've got a clean title and anything else that's ordered the same day?
They're going to order the appraisal.
And that comes out of the upfront costs.
That's when you're going to have to, that's one time you're going to have to cut a check up front.
All right. Cut a check or credit card information?
Most is credit card.
Back 21st century, so.
Never cash.
Okay. And what about the home inspection? This is one I often get as a question. We want to hold off on the appraisal before we do the inspection. Why would that be important to order the inspection up front?
If we know if we're worried about something with the house and we think there's a chance we're going to back out, we may not want to spend that appraisal money up front. Okay. But the challenging thing is the appraisers are taking 10, 15 days.
Oh.
So if we hold off for 7 days, the appraisal takes 15 days, you're on day 22 and you're closing on day 26. You can't wait.
Yeah.
Right? We've got to sprint to the finish line. So I always advise ordering the appraisal on day one, unless we're extremely concerned about the property condition. And I've seen that. Hey, I'm buying a 1927 house. I looked at the foundation. There were tree stumps. And I don't know about this one. Okay.
So you've got the appraisals ordered, the home inspections ordered. You've already done your earnest money deposit within, let's say, 3 days, whatever's on the contract. You said something about insurance before. You shopping for insurance? Where do we begin? Time
to start ordering insurance quotes, right? So a couple things. I would ask your mortgage loan originator, your real estate agent for local insurance referrals. They kind of know the good ones in the business. But you need to shop for your own insurance and you need to be comfortable, right? I want to tell you a quick story. I did a loan for one of my wife's friends. And I'm not going to mention her name, but she just had no interest in doing any of that stuff. So I took her under my wings and I got her a couple insurance quotes and she chose one of them. Thank you, Lord. And 24 hours after she closed, she opened her front door and 3 feet of water flooded out of her front door. The whole house was flooded. Everything was ruined from the drywall down, the cabinets, the flooring. There was $150,000 in damage to the house. And the reason why it's important to have borrowers shop for their own insurance is because what if that insurance didn't cover it? And here I am helping her,
Right. So as loan advisors, we don't offer services in that regard. We can have them shop around, but really they need to look at their own insurance.
100%.
They need to make sure that this is what
100%.
they want for their own house and for the betterment of their family.
And here's the thing. We're not asking you to pay that insurance premium. We're simply saying, hey, get me a quote of the person you want to go with.
And that's a question too. When do we pay for that insurance? Does it happen before, middle,
99% of the time it happens at closing.
At closing. Okay.
Less documents if you just pay it at closing. It comes out of your funds needed to close, your required cash to close, right? And again, it's not cash. Okay, so all the upfronts have kind of been done. Your processor will prepare your loan for underwriting. And by say your processor, I'm talking about the staff from, the loan company you're using. It's not like you're going to go find a processor, right? So in my world, I like to send a loan to processing immediately or to underwriting immediately. I want my conditional loan approval week one. Okay. I want my conditional loan approval to simply say, hey, provide a copy of the appraisal. Because that's the only thing that should be outstanding, right? So your loan's conditionally approved. Contractually, we tell the seller and the buyer's agent that your loan has been conditionally approved. Okay. And we're waiting for an appraisal.
So when the appraisal comes back, I guess is this question, since that we've ordered it, it's come back, let's say 10 days later, why not? What should we be looking for on that appraisal to say we have issues, we don't have issues, we're good to go?
So first, let's talk about what an appraisal is.
That's really the question,
yeah. So it's providing market value to the lender.
Okay.
It's showing you, hey, you're buying this house for this amount. Similar houses in the neighborhood have sold for this amount.
Okay.
Also, is the value in as-is condition? Is the house in as-is condition? Or does it need repairs? Some houses have health and safety issues. We're not going to lend on a house that has health and safety issues unless we're doing some kind of construction or renovation loan.
Okay.
Because the last thing we want, is to give you a loan for a house and, your toddler walks in and gets shocked by the electrical outlets for the dishwasher, right?
Okay.
So basically the appraisal tells the lender the house is in as-is condition with no health or safety issues and the value is X. Okay. As long as the value is the purchase price or higher, you're good. If it's the lower then we have to talk to the real estate agents.
So that was the question. Who actually gets that appraisal? I know if the borrower purchases the appraisal? Is it the borrower? Do they have to share it with anybody? Do they? What do you do?
It's a great question. So the appraisal belongs to the borrower.
Okay.
It is not customary to share the appraisal with the real estate agents. It's definitely not customary to share it. In fact, we don't allow it with the selling agents because let's say you're buying the house for 400 and it appraises for 500. Mm-hmm. You don't want the seller to know that. He's going to use it against you. You ask him for something, he's going to be like, go fly a kite. Right? So once the appraisal comes back, it's as is.
As is. Okay, that's the phrase that we're looking for. As is, purchase price, we're good.
Yes. We're immediately submitting the loan for clear to close.
Okay. So we've gotten all the documents in. We've got the conditional approval. The condition was for the appraisal. The appraisal's in. So now we submit it. Do we have to be notified that we've received the appraisal at all? Is there another document that goes along with that?
So you legally have to provide a borrower with a copy of their appraisal 3 days or more before closing.
Okay.
So as a lender, we exercise the day I get it is the day you get it.
So good practice, I guess.
Right.
So they've gotten the appraisal. We've submitted it to clear to close. That was the phrase that you used.
So let me talk about that real quick. So let's talk about the underwriter.
Are we ready to go? Or
let's first talk about the underwriter. The underwriter, is this scary mythical person behind the curtain, right?
And again, don't ever see him, right?
This is not somebody you hire. This is somebody that works for the lender. It's basically
licensed
the person,
by this state. Or?
Yeah, it's basically the person who writes the check.
Okay.
They're making sure everything we've told them about the borrower or the purchaser is a fact. So, they work at ABC Liquor. They make X amount. Here's the pay stubs. Here's the W-2s. Everything checks out. The assets are theirs. So they're basically dotting all our I's and crossing all our T's and then giving us permission to fund this loan.
So does that mean that we're ready to close within that day? Are we ready? We get the clear to close. Are we closing today?
Nothing happens today.
Okay. So what's the process, I guess, after you're clear to close?
Well, I can tell you I breathe easily once a loan is clear to close because that means all of my conditions, all the hard stuff, all the rock climbing is behind me. I'm at the top of the mountain.
Okay.
All right. So there's a couple more compliance things that need to be done. One of them is called the closing disclosure.
Okay.
So the closing disclosure is a document and it basically says, hey, here's what your loan looks like today. So you knew what it looked like up front. And now this is the last document the lender is going to provide to the borrower is the closing disclosure.
Is that the exact money that I need to close?
Not final yet.
Not final. Okay.
Okay, here's the reason. The title company will produce the final statement. The title company, there's going to be credits you're going to receive because the seller has owned the property for a certain amount of days in the year.
The appraisal, that was a part of that cash to close.
Yeah.
So is that taken off at that point? Or
yeah. So you might have been charged upfront for your appraisal on your credit card, and then you might see a charge on your upfront documents. But once we've received the fact that you've paid for the appraisal on your credit card, we will mark it as paid outside of closing. It will reduce your cash to close. Okay, so once the closing disclosure goes out legally 3 days before closing, and the borrower has acknowledged the closing disclosure, then in the background, the lender and the title company are working to balance the final numbers and send the package to title.
Okay.
But I want to really talk about what the borrower should be doing at this point. One, and we've talked about the wire on past podcasts, right? You have to get with your financial institution, your bank, and you have to know their procedures for sending a wire. So what's a wire? It's how you get your money from your bank account to the title company. All right. And you may have to set an appointment. I don't know what the COVID restrictions are. Some banks make you come in, some banks don't. But it's important to know how to send a wire.
And make sure that the wire digits, as you probably mentioned in the previous one, make sure that they line up with the title company.
So important. You want to call the title company directly and verify the wiring instructions you've received.
And why might that be, Vito?
Because of wire fraud.
Wire fraud.
Phishing
schemes.
Madagascar. Yeah. And I'm not talking about like snapper phishing. I'm talking about email phishing. Okay. So another thing you're going to do, the wire is typically the day of closing or the day before.
Right. And we've always heard of that. So the wire, and you're ready to go at that point. You're ready to close on the house. But you might want to make sure that everything is the way that you saw it that first walkthrough, right? So you got maybe a final walkthrough you set up with your realtor, or how?
Yeah, so I think exactly what you said. You want to confirm the condition of the property is what you expected it to be in. So the seller's moved out, all his junk is gone.
Maybe cleaned.
Yeah, well, it's just in the condition you expected it to be in, right? You don't want to go close on a $400,000 mortgage home and he didn't move a thing out. You want to confirm the house is in the condition you expect. So typically a final walkthrough is done the day before or the day of. I've had several borrowers close in Hawaii, and their real estate agent did the final walkthrough for them via a FaceTime. Okay. Here's what it looks like, and everyone's happy with that.
And then I guess from there, then if it's the day of, then you can just go over to the title company.
Yeah, so this wasn't hard, right? This was a pretty easy process. And I think the key is a good mortgage loan originator and a really good real estate agent. Mm-hmm. It's like if you go to surgery and you have the best surgeon, you're going to be taken care of.
Right.
It's no different in the mortgage industry, in the house industry. If you have a really good real estate agent, they can foresee all your hills and valleys and prepare you for them. The same with your mortgage loan person. So it's the day of closing. You go to the title company. Mm-hmm. How do you know which the title company is? Well, your mortgage loan originator or...
It's on the contract.
It's on the contract, yeah. So. You sign 172 pages.
Okay.
Most of them you've already signed once. This is like... You're going to sign the receipt of an appraisal again, the Fair Credit Reporting Act, the...
Tax return.
Equal... Opportunity, whatever. There are a bunch of documents. There's like a couple of them that really matter. And to me, that's the mortgage note.
Okay, mortgage note. What else?
The promissory note, mortgage note, is what basically tells you the terms of repayment.
Okay.
All right. The mortgage is what allows them to take the home if you fail to pay.
Yeah.
Right? It's 18 pages long. I've not seen many people read it. But there's some important things in there, like maybe you're buying a second home and you're not able to rent that home. You want to read that so you know.
So traditionally, how long?
1 year.
Do you have to stay? What did you say?
1 year.
1 year. 1 year, as fast as you could, right?
Well, you're committing when you're buying a primary residence. Right? You're committing to 1 year occupancy. Okay. Right. So after you've signed all your documents, if you're closing with community lending, you should immediately get your keys. Because we have no funding authorization. The title company doesn't have to mail the package. It's, hey, congratulations. Here's your keys. You're out of here.
Awesome.
All right.
Thank you so much for taking me through that. It just helps to clarify, for those that are looking at buying a first-time home, getting out of that basement, and finally taking that step into home ownership. It definitely helps us answer some questions, I believe,
And again, if I can reiterate one thing, having professionals who are answering your call, answering your questions, and providing the information you need is probably the most important part of the home ownership transaction.
And also that anticipation of those potential issues that might come up too. Being the skilled in the years that we have at the office, your experience matters.
If you know all of your hills and valleys before they happen, there's no pain, there's no anxiety. It's
a refreshingly simple experience.
Yes, a good loan originator, when you're talking like on that first phone call, is listening to every one of your words and manipulating how he's going to get your deal done from that call one.
Fantastic. And you said treat him like a friend, a communication throughout the process, just making sure. How often do you, I guess, personally follow up with your borrowers or the real estate agent?
So I've lived by a mantra in my own mortgage business, and that's if my borrower or real estate agent or title company has to ask me for an update, I've failed. Right. So my goal is to over communicate so that you're never wondering. Like you shouldn't have to wonder what's going on, because I guarantee you, if you've called me to say, hey, what's going on with my mortgage loan, you've probably thought about it for a few days before you've done it. Right. And I want my borrowers to go to bed every night knowing I'm in control.
Right.
And I know exactly what's going on, and I know exactly what the next step is, right? So some days, there's 5 days where nothing happens. Hey, your loan's conditionally approved. We're waiting on a copy of the appraisal. I expect it back next Tuesday.
Perfect.
But that doesn't mean, I can't send you, a text message or an email every other day saying, hey, nothing's changed. We're just waiting on a copy of your appraisal.
So the communication, the level of experience, the anticipation of hills and valleys, finding that professional realtor, as well as the professional loan advisor, it really does make it for a smoother transition.
100%.
And can get us that home buying experience that we often long for. Right? So,
all right, guys.
Thank you for that.
Thank you so much for being here with me today.
It's always a pleasure.